November. Let's go ahead and kick things off for the Pulver report. How's everybody doing today? All right. Risk disclaimer, we understand risk in trading. Please and always use trade capital only. Do not trade with money you can afford to lose. We're trading stocks, options, futures, forex, cryptos. You know the deal. If you're following me on social media, make sure it's the real me. Mondays and Fridays, youtube.com/Chris Pulver for the Pulver report. The other handle that I'm following the most and being the most active with, besides YouTube, is Twitter at Real Chris Pulver. Instagram, TikTok. I'm on there to stream. I honestly hate those platforms. So if you want my my content, then YouTube and Twitter are the best place to be. I'm also streaming this session on multiple outlets like Facebook, Facebook.com/Real Chris Pulver. Okay, let's get into the charts. Let's kick things off. I'm looking at the pre-market right now, 397.65. Nice $3 gap to the upside on the SPY. Interesting little move. We've also had, I've been watching this pretty closely. This is the Hang Seng Index, or the Asia markets. A little bit of a pullback today, but we've seen all week currencies, the Australian dollar, the New Zealand dollar doing pretty well. We've also seen the dollar index after a nice flush the last week, Thursday, Friday last week. We really had an indecisive week on the dollar index. Now, a couple of things that could happen here. Dollar index could pull back into this weekly pivot before another flush lower. We might pull back a little bit deeper into the backside of this trend line before we have a flush lower or retest those bottoms. But the couple of charts, I posted this on Twitter this week. If we have the US dollar index, which is an FXCM derived indicator, or index rather, same thing here, weekly pivot and 200 exponential moving average. So I'm still looking for another flush to the downside. I think that if we get that, bring on the holiday rally. We don't really have much in the way of news as far as, and look, we got through the Fed for November. We got through CPI. We got through PPI. This week we had 9 Fed speakers, and the markets were really sideways, right? Pretty choppy. Not really any big bullish or bearish move. If you're following me in my equities on demand class, we said 390 was a big level this week. And it's interesting that we pulled right back to it. And we rallied off that yesterday. And today we're looking at about a $3 gap to the upside. So it's going to be interesting to see if the bulls can overtake the highs today. And if they do, does that lead to more dollar weakness? Because if we get dollar weakness, that's great. Because I'd like to see dollar yen head lower, the US dollar index head lower. And even having euro dollar and pound dollar revisit some of the highs, New Zealand dollar revisit the highs. So we'll see how that takes the currency trade. Let's take a look at oil, gold, silver. Let me first sign into YouTube and say hi to everybody. We've had a pretty good week so far. I've got some nice profits running. CAD Swiss is up. New Zealand Swiss is up. Euro New Zealand short is up. Aussie New Zealand is up. Dollar Swiss is up. So we've got some good trades running. And I'm going to stick with those for right now. Let me check and see. I've got this little non-FIFO trade on dollar Swiss. It's currently up around 86 pips. New Zealand Swiss is up around 65 to 70 pips. Aussie New Zealand is up close to 80 to 100 pips. Yeah, so all good, all good. Let me check in here. Nice to see everybody. All right, Brad first in the chat. Nice to see you, Brad. Fun trading this morning. All right, good. Tony, what's up, man? How are you? Morning, brother. What's up, brother? Nice to see you. All right, Kay, good morning. David, good morning. Sterling, good morning. Andrew, what's happening? Look at that. 1609 this week. Great job. Yeah, absolutely great job. Gail, good morning. Steve, good morning. Daniel, good morning. Daniel, it's on. I've got my notepad to watch your video before my class today. I've got this session. I've got my equities on demand. Then I have a little break before my 1 p.m. Master Flex. I'm going to watch the videos that you sent me. So we can, if you're in Master Flex, we talk about it, in that class, or just I'll send you an email and respond to it next week. But we can talk about it. Chris, good morning. Kevin, good morning. Jerry, good morning. John, what's happening? Greg, good morning. Craig, good morning. Elizago, happy Friday. Exactly. Yep, good stuff. Okay, so let's go to, we did DXY. DXY, I'm going to set a chart alarm here at the lows. Let's go fresh lows on the DXY. Pull back towards the weekly pivot right around 107.94. Just going to get this price surrounded a little bit. And 109.30. 109.30. Okay. 109.30. This would be retest trend line. Right, so a couple areas there to see if we can fade the dollar move and get a holiday rally through Q4 and try to finish on a positive note. So far, the SPY, by the way, off of the kind of flashy CPI low, we have rallied. I think we've rallied like 12%, maybe 15%. Yeah, 15.5% right there. Current market close yesterday was around 13 and a quarter. If we gap to 398, that puts us up 14. But again, we got to retake the highs. It's 15.5% off the lows. Still down for the year. Every index down for the year in kind of deep corrective territory. But it's at least a fight back, right? I mean, from this level, that was 27.5%. If we end up getting back to this 400 level, 405 to 410 was my resistance. That would end up finishing the SPY around 15% down for the year. So still down. And, we'll probably have to deal with that. But I think at least for the timing of the rest of this year, I mean, we have the Fed speaking up again. I haven't looked at the Fed Watch tool. It's been nice. I'll just say this. This has been refreshing. Not having to look at the Fed Watch tool this week. You know why? Even with 9 Fed speakers, it's like I think the market has priced in most of this. So we have the higher probability of the 50 basis points hike for December 14th meeting. And then we're looking at another 25 to maybe 50 points in February. And then a pause in March. So that's right here with that 43% probability pause. We may have a 25 basis points increase in March. And then in May, that'd be the pause. Okay. So we'll see. Obviously, we'll see. But it's been nice. It's been nice not to know, like, oh, the Fed is dominating the markets again. They'll be back in the, I'm sure back in the news. Anticipation of the December 14th meeting. If there's any changes, we're still watching. I mean, we've had improvements in CPI, improvements in PPI, so that's good. The Fed, I'll give them credit for this. The forced transparency that the Fed has delivered to the market, even though it's created all this uncertainty and all this advanced pricing, at least it's out there. Versus the crazy surprises like some central banks are known for, Swiss National Bank. When they announce something crazy and the market just has a hellish overreaction. So at least the Fed is dipping or dripping this information in to the market consistently, and even with Fed speakers this week, they've been pretty consistent on their messaging. All right, so let's go to oil, gold, silver. Oil had an interesting day. I posted this also on Twitter yesterday, so if you want to check out my Twitter handle at Real Chris Pulver, I posted on oil charts. Let me go to, let's see, can I just go to my notifications? Messages, explore. I'm trying to think where I find my posts. I guess I'll click on this. Here it is. So that's streaming right now live. Hello. In a Seinfeld voice, what's the deal with oil? So energy sliding lower. Now I'm bullish above 95, and we have room to drop back down to this yearly pivot around 70. So, it's interesting to see what's happening geopolitically because Saudi Arabia, I think it was last week, was announcing another 100,000+ barrels per day cut from production. The U.S. has been dumping its strategic petroleum reserves to the markets all year, and we're down to like 1980s inventory levels. Eurozone, I'm wondering, is this Eurozone energy crisis, has it been priced in? Are we seeing the Eurozone quickly move as fast as possible into alternative energy pushes? Because they obviously are highly dependent on Russian oil and Russian energy. And if that's being, cut off or siphoned off or whatever, or, is it the Gazprom, the Nord Stream, it blew up, right? And we don't know if that was Putin or something else, but nevertheless, oil prices are dropping, and I'm curious. I mean, look at today. There's another 4 to 5% to the downside on oil. Man, we are quickly dropping. So this resistance right here. Check this out. We have daily 200 EMA. Once we crossed over, right, resistance. We've hit it, rejected. We hit it, rejected. We hit it, rejected, and we're not that far away from these lows. So I was looking at this yesterday as a potential head and shoulders. Okay, left shoulder head to neckline. But with this thing breaking this right shoulder now, this is either a potential descending triangle, something like this, if there's going to be more compression and pricing, or we are just straight up falling to levels where I'm sure there's going to be plenty of buyers down here between $65 and $70. So if I'm looking to return as a bull to oil and energy in general, it is probably down here towards sub 70. So I really like this $65 level. If we drop aggressively, I would take 65 all the way back up in here to around 85, which again, that's a pretty good chunk of profit. But right now, the flow is down, okay, which I think is really interesting. Gold. Gold pausing at the top, similar correlation, inverse of the dollar. So if we see a dip or a drop in the dollar again, a drop in the dollar should be another pop in gold. We may pull back to this weekly pivot or this little pocket from last week's candles. Decent support around 1725 to 1700, and see if we can head back up a little bit higher on gold. I think this is a really solid play against the dollar. Same thing on silver. Let's see here. Silver pullback. We're sitting at 21.01. There is a weekly pivot pullback towards last week, not this week. We already hit that one. But again, if we have a weaker dollar, does silver get another nudge to the upside? I'm still looking in the bigger picture. If this is gonna take quite the run, but if silver can get up to these highs, it's pretty open space back up into this $26, $27 level. Possibly 29 to 30 is my price target from buying this thing at the lows. I was willing to buy this. I'm still willing to buy this all the way down to 14. Take this all the way back up to highs around 29. Okay, so silver for me is a long-term play, even if it's a massive range. Now, longer term, if we can get a break above 30, silver can make a heck of a run towards 45 to 50. But I would still take, let's say this is the low. Let's say we're low at 18 bucks on XAG. I'd still take it up to 29, 30 bucks all day. All right. And so in this area, it's kind of a complicated pattern, but do we have a bottom here? It's possible that we made a bottom. We have another pullback, another push. Like I said, this is open space. We start looking at bullish trend lines. Any pullbacks looking to buy dips, take it back up to these highs. So does the dollar cooperate for that much additional weakness? I'm not sure, but there might be some some recession pricing on silver, some functionality and utility on silver, but we'll find out. Crypto, of course, had a pretty terrible week. Bitcoin trading at 16.7. It's going to be interesting. I think I mentioned this to my trading rooms this week. So I had a pretty red flag experience this week on Coinbase. I was like I usually do. If I make a purchase on Coinbase, I transfer my holdings to a cold storage wallet, and this is the first week that I was not able to do anything. So again, the good thing is it's about 15 to 20% of my overall position, but still, the fact of the matter is Coinbase would not let me actually control my assets. So if I wanted to take it out, I'd have to close it out, basically send it to my bank in US cash and then say, oh, I have my funds. So, I mean, I believe my funds are safe. That's not what I'm worried about. It's more like I just want to keep my digital assets, but transfer them into a cold storage wallet. So that was a red flag. I went back and forth for probably an hour with customer support. I'm still waiting on an email based on an escalated case. It doesn't sound promising. It doesn't feel promising. I know that Coinbase would be potentially like the last domino to fall if we have any, insolvency issues. And they've even came out with a statement saying that if they ever went bankrupt, money's not safe. So again, I'm just throwing it out there as a potential red flag. I don't know, and I've literally I can go on record. You can check my sessions from 3-4 years ago. I said from day one that everything with crypto, everything with blockchain, everything with Web 3.0, everything with even Bitcoin, Ethereum, everything is risk capital. And if you're willing to part ways with 100% of what you put into it, that's the risk. So I've accepted that risk, and I don't like it. And hopefully that's not the case, but that is the warning that I gave years ago, and I stick to it. Okay. All right. I can look at it again today. Yeah, I'll try. I will look to see if I can send it, but that'll be this afternoon. Okay, elsewhere, stocks and options. Holy shnikes, what a crazy week we had. Here is my notepad. We were ridiculously active this week. So this is just a little snapshot tidbit of what we do every single day in Equities on Demand. We reviewed all of these positions with 11/18 expirations. We did a ton of management. Here is my Telegram channel for Equities on Demand. I just want you to see how insane this week was. In a good way, though. We ended up probably closing on 75 to 80% of our trades, closing for profit. Some were a little bit early, but we're just going into Q4 very protective. But we had lots and lots of profits this week. We have a couple of stocks that hopefully get called away today. I think that list is in here as well. I posted it a couple days ago. Alcoa, this is I've got a $49 covered call. Intel, I've got a $30 call. I think I may have rolled it to 30, 50, or 31. I will double check that today. Uber, I've got a 35. I'll check that today. Delta Airlines, a 34. I believe we're trading at 35 and change. Pulte Homes is PHM. That was $40 covered call. FCX is 34, but I think I rolled it one more time for a decent premium. So that's 1, 2, 3, 4, 5, 6 stocks to get called away for profit. And then we have probably 30 plus positions and different symbols of taking profit. We took some small losses, but yesterday a nice little surprise was Alibaba. Like I said, Asia market's getting some lift. So Alibaba had a huge candle to the upside yesterday. I was able to lower my cost basis to 67.19. I have a currently, this is crazy. I put in a $80 covered call yesterday and I collected an extra $3 and change in credit. So I lowered my cost basis from $70 down to 67, and we're trading at 82.30 on the pre-market. So if we stay above 80 bucks, I get the stock called away for just shy of 13 bucks a share. I'm pretty happy with that to get that exposure out of the way. Get my cash back in these shares. Same thing with KWeb. Okay, got some credit spreads. These credit spreads are doing great. Also, we have it covered at 26.50 this week. And if it gets called away, awesome. My break even's 20.70, so that'll be just shy of 6.50 a share or $6 a share. So yeah, I'll add those actually to the mix. So KWeb and Baba, I need to add that into this. Let me see if I can edit that. This one here. Let me see if I can edit this. Edit. So Alibaba and KWeb FC. X already did. FXI. Those are all China-based stocks. So Alibaba is like the Chinese Google. KWeb is basically a tech ETF, and FXI is large cap China. So we've had some big rallies. I also posted this on Twitter. Anywhere between 25 and 50% rallies off the lows in China stocks. The HSI, the FXI, Alibaba, all these crazy responses to the upside, which is pretty encouraging. I'm taking it as a short-term opportunity to protect profit. I'm not looking to stay exposed in China for too long. Just not sure if this is the real deal recovery or if this is kind of a flash in the pan and we just compress lower. Not sure yet, but we'll find out. So overall, it's been a crazy busy week. Let's see. Daniel saying waited to jump in on dollar yen, but train hasn't pulled out of the station yet. You're looking to jump in what way? You going bearish or bullish? So I have pending sells. I'm still holding my short positions. I think I have. I don't know how many. I'm gonna double check. I probably have 15 plus. Yep, I have 15 positions on the dollar yen holding short. I did get filled on a couple shallow pullbacks. I have another one at this weekly pivot, and I've got some other ones spaced out to 144.50 and 145.00. So I am looking for opportunities to, fade this move. So flush, little correction here. Hopefully one more push down towards this 200 EMA, challenging this low. We could be putting in a pretty awesome top for, once and for all, at least for a correction. This could be a high to low. This could be our potential like head and shoulders or neckline. And then we have a bigger move coming towards 120 to 118. Again, hopefully this is a pretty black and white trade, meaning if we sell this, stop loss above the swing, this becomes a pretty binary trade. We're either right or wrong. So spacing this out with a decent risk percentage, this is not one that I would say, hey, let's just scale in and forever short the dollar yen. This would be a pattern that either works or it doesn't. But my goal right now is to hold my positions and look at this extra flush down to hit this 200 EMA. Hopefully this is around 135 or 134.50. But yes, I'd like to see this drop a little bit lower. You're not biased in any direction yet. Yeah. Well, like I said, the short term, if you're looking short term, we're probably going to pull back towards this weekly pivot. But I would be looking for a trend line break and another push down. If we're going to push lower, again, the dollar has to get weaker. I don't think this is going to be a play by the Japanese yen. I think this is a play by the dollar. I think this is a play with the stock market going higher. The other thing we've been watching the last couple of weeks that showed us some encouragement on the bottom of the stock market would be the 2-year yield. So it's USO2Y. We're pulling back on the right side of this trend line, but there is a nice little head and shoulders pattern here. So if we break lower, right, we break lower on the 2-year yield, that's a good sign for the stock market to continue to push higher and the dollar to continue to push lower. Again, 200 EMA here as well. I don't trade 200 EMAs as much on yields because this thing has been pretty much a broken chart. You look at this just parabolic move, right? I mean, literally to start this year, we're trading at 0.74 and we had a high at 5.14. I still go back. I'm not sure what happened to the data feed here, but this spike was 5.14. That was a couple weeks ago. And then we created that top. So if we do have a bit of a top here and we just start to drop a little bit, that's good. But holy crap, if that's all we have is a low, high, and a little bit of equilibrium, a little bit of rebalancing, that's enough to give us this Q4 rally. And maybe this even carries over into Q1 next year. We will find out. Okay, any charts you'd like me to take a look at this morning? The 10-year still sitting at 0.25 in the JPY, so that's why I said the JPY is probably not going to change much. Let's look at Ethereum really quickly. Ethereum still trading at 1222, stalling on the crypto side. Really, I'm sure everything has to play out with FTX, and that's a giant blemish in the industry, and it's a huge mess right now. And it's certainly making people question what they're doing in cryptos in general. And it's really showing the obvious that, Bitcoin is not software. Bitcoin is not a crypto coin. Bitcoin is not, it's not blockchain. Anyway, it's just weird. And your custodians are, that's why I'm a little concerned with Coinbase. But like I said, I'll try to see if I can get a resolution there. I'm just throwing it out there as a potential warning. Okay. All right. So we can take a look also really quickly. We've had a pretty good week of Masterflex. So, I've got a class this afternoon at 1 p.m. I do have a direct link if anybody's interested. If you'd like to get involved in class, let me see if I can find that link really quickly. Chat. It's in here somewhere. Yep, here's the direct link for it. Also, if anybody is a student at Market Traders or a client at Market Traders, it is best to contact your educational specialist because I know that this, there's a lot of stuff this comes with. So I just want to make sure that if you did a direct buy from me, I appreciate that because that would be a slightly better bump for me getting credit for it. But the reality is I want to make sure that you have access to everything. You're getting the trading room with me for the next 5 months, which, we have trading rooms on Tuesday, Wednesday, Thursday for the flex room. Our master flex classes are on Fridays. So I'll take the link right here. Let me see if I can just post the link. Copy link. So here's a little master flex. There we go. So there's a direct checkout. And again, it's a really simple system. What we did all week and what we'll continue to do Tuesday, Wednesday, Thursday. If the volatility looks solid, we take a look at the currency strength chart. This would be a good day as well. I mean, going into the morning session, the New Zealand was strong, the CAD was weak. So what's our best trade of the morning? For the last 2-3 hours, the New Zealand CAD was the best trade to the upside. Okay, right now the New Zealand's finally starting to dip a little bit, and we're starting to see a change in the Swiss, a change in the dollar, change in the euro. It's interesting that the Aussie and the New Zealand are both dropping at the same time. So I still like my Aussie New Zealand short. We took that trade this week. We got filled like 109.15. That is currently running to the downside. I think we're up like 50 to 70 pips on this one. We're trading at 108.55. So we're up about 65, 70 pips on the Aussie New Zealand. We're looking to take this back into this 107 area or slightly lower. Okay, and at some point when this is, aggressively making lower highs, at some point we flush down, pull back, flush down, pull back. We'll get a trend line break. We'll wait for that trend line break, and we will start buying the Aussie New Zealand. Okay, I'm not sure if that level is going to be between 107 and 105, which I have a pocket built right there, or I have some pending orders at 103, 102, 101 in parity for a much larger kind of set it, forget it, investment trade. Okay, let's see here. CAD yen still wait and see? Yeah, I believe so. Yeah, CAD yen still sideways. Look, it's getting close, but here's the deal. It's Friday, right? I mean, do I really want to take a trade right now on Friday? I mean, we're selling the lows. I'll say this daily target is very possible, and that's still another. This is crazy. This is 260 pips away, or 240 pips away, rather. 240 pips away to hit that red line. So there is still an opportunity there. But like I said this week in Flex, if it just holds here and we pull back, we actually have a better opportunity to go long with a tight stop loss, get back to these highs, and then look at selling this again. See what I'm saying? Like, I'd rather sell this nice and high with a stop loss above with confirmation and trade this for a 500-600 pip move with a much tighter stop loss versus selling it at the low for that last little chunk. Because my concern is, we come down here, spike at this 200 EMA, and then we jump right up. That's my concern. So I don't love just selling the lows, although it is a potential scalp for 200 pips. But it's not there yet. It truly is not there yet. We have not broken these lows. We've not taken out that low. The daily candle even is not confirming. So I'm not ready to jump into that CAD yen yet. Okay. Today's Masterflex is 1 p.m. Eastern time. Okay. Yep. Yeah. Thanks, Donna. Yeah. Do me a favor. I mean, people type in the chat. That's great. Everyone watching, if you hit the thumbs up button for me, just make a habit out of that, right? It helps the channel a lot. Get some nice support. That everyone that's watching, click the thumbs up button. If you check this after the fact, every session I host right now typically has like 400 to 500 views. So hopefully we can get those thumbs up and likes up. I mean, literally that's what YouTube is kind of built for. The whole point is let's engage with the community. We have these live sessions, and the more likes, the better. So I appreciate that. Okay, let's take a look. So Aussie New Zealand doing pretty well. CAD Swiss, I'm long on CAD Swiss. We're getting a little bit of a pullback right now. So I'm still going after this weekly pivot. I'm not done. I'm keeping my trade size small in CAD Swiss, but I'm going to watch, pull back to the weekly pivot, pull back to this pocket around 72.25. And also, if it goes a little bit lower, I'm just going to scale back in. So I told Trader this already. If the CAD yen, we're holding this level here. Okay, if we hold that level, I expect it to pop back up here towards 74, possibly 75. If we come back down to the lows, I'm still just going to buy more. build a position, build more on the right-hand side of the trend line, and look at a big, big move to the upside again. Okay, I really did suspect that this would be wave 1, 2, 3, 4, 5, and we're getting a corrective wave here. So 1, 2, 3. We have that corrective wave. Now, if we can hold this area, I'm looking for this trend to continue. But if we come back down, then I guess we're looking at a big range. This is support right around 69 to 6,800. But the way that this fell the last week or so, this is a weekly candle. There's a massive inefficiency right there. So I'm still interested in buying low and taking it up to that pocket. Dollar Swiss, this continues to be kind of my long hedge. We're pulling back pretty nicely on this candle. There's a ton of past resistance here to become support. So nice little spot there to buy. You can see this ridiculous candle. I'm just trying to eat up some of that liquidity and some of that pocket. So my price targets here, 9,600. I talked about it this week. That's where I'm going after a weekly pivot. So I'm going to stick with that dollar Swiss long in the interim. Yen crosses, I just don't think they're ready to break yet. Aussie yen was sideways. We're trying to sell this one nice and high. I said, look for a breakout. Maybe we get a slight breakout to the downside, but I told traders, let's keep an eye on this. We've got a breakout here, or if we come back to the high, we can scalp, but I'm still looking for a sell trade. If we break the lows, we can follow that. Euro yen, pound yen, New Zealand yen, CAD yen, Swiss yen, they're all the same. They're all sideways, right? Swiss yen's dropping a little bit, which is nice. Currency strength chart, we're getting a nice little run on the yen. I'm not minding this at all. Yen stronger. My dollar is also moving with it, which I don't love, but hopefully the yen will just kind of overtake it and give us an imbalance where the yen is a little bit stronger. I am currently short on Swiss yen and dollar yen right now. That's it. Okay, everything else I'm watching. So right now it looks like CAD yen could be a pretty good trade. I know that's what we're watching for a potential short, but I just don't love selling at the lows on a Friday. If it breaks lows and there's still 240 pips, we can take a scalp on that next week early. Okay. All right. Anything else for today? We can keep it short and sweet. We've had a crazy busy week. It's been pretty solid overall. Let me check a couple of things. Perfect Storm. Let's check Perfect Storm Pro. How'd it do? Cleared 420 pips this week. Thank you very much, Miss Lippy. 420 on the Perfect Storm Pro. How about Perfect Storm, the original? 82 pips. Oh, wow. That's a pretty quiet week for the old Perfect Storm. So 82 pips on regular. 420 on Perfect Storm Pro. How about my Pockets Pattern Pro? Yep, right there. Pockets Pattern Pro. 311 pips. So 311, 82. Let's just say that's 400, 400, 420. That's 820 for the week. All in automation. And how did I do with some manual trades? We closed up about 2,500 pips this week on some positions. So it's been overall a pretty good week. I'm showing here, yep, I'm up 25.50 to 25.77 so far for the week. So I get, but that that's months in the making for my discretionary trading. I've been building positions for a while, so it's nice to take some profit this week. Okay, but auto's doing pretty well. Masterflex was crushing it this week. We had some really good flow. And again, just follow the alignments. Pretty easy, pretty good combination. Look at the dashboard, trade your lines and colors. I teach everybody that in class. We have class again today at 1 o'clock if you're interested in joining. If you want to also get a piece of the Masterflex, you can trade with me Tuesday, Wednesday, Thursday for the Flex Room, and then have the exclusive Masterflex on Fridays. Plus, we have our entire community for Masterflex, which is right here, which has been amazingly active. So a big shout out and big thanks to all the students in Masterflex keeping this thread super active through the week, which I love. Really encouraging, helping each other out, testing the robot, trying different combinations, building presets, sending templates. So it's awesome. So it's going to be a lot of fun to take this into the end of the year and to look forward to kicking all sorts of butt in 2023. Yep. Thanks, Tim. Okay. Good stuff. All right, everybody. I'm going to let you go for today. Thanks for being with me. Short and sweet session. Equities on Demand students, I'll see you at the top of the hour at 10 o'clock. Let's wrap up the week, and let's make sure we didn't overlook anything with all the crazy crazy management we've had. And Flex traders, I'll see you at 1 o'clock for Masterflex. It's Friday. Enjoy the weekend. We'll be back at it Monday for the Pulver Report at 9 a.m. Eastern Time. And let me check really quickly for any news. Maybe we can do some bonus sessions next week if it's worth it. So for Flex, let's check the week and the schedule. Anything I need to modify. So Monday, let's go to next week. So next week's going to be the 21st to the 25th. Anything here? So we have 8 p.m. cash rate decision for the Aussie. That's another the New Zealand rather, 75 basis points to the upside. So expecting a rate hike for the Kiwi. Maybe that's being priced in now with the stronger Kiwi this week. Let's see. We have PMI numbers coming out of the Eurozone on Wednesday morning. Flash services PMI for the U.S. at 9:45 on Wednesday. FOMC minutes at 2 p.m. ECB or U.S. bank holiday on Thursday. Oh yes, Thanksgiving. Jeez, oh Pete's. Wow. Duh. Wednesday through Monday next week, I'm going to be gone. I'm heading out to California for the holidays, and so what I'll probably end up doing is posting a video. I'll be traveling actually Friday, so what I'll try to do is get a video around and get it posted on my YouTube channel versus doing a live session. But we will be live on Monday for the poll report. I'll probably do some video updates for classes next week as opposed to live sessions, just to accommodate my travel schedule. And then Friday, instead of a live poll report on Friday on YouTube, I'll just post a video. It'll just be a recap. But here's the deal. Holiday trading is a lot like path least resistance. All right. So if you have established trends, if you're seeing some breakouts in the markets, you want to go with those breakouts and follow that. There's very little opposing trading going on during holidays. So whether it just carries into Thanksgiving or possibly carries into the first part of December and goes until the Fed, we might have a couple weeks of pretty steady trading and pretty steady trends. So just be aware of that as we go into trading next week. So I'll repeat that next week on Monday. That's going to be important because if we have some trends to follow, it would be in our best interest to do that and trade what we see, which is all the more reason to follow something like Masterflex because it's an easy visual system to follow the trend. Okie dokie. All right, Jan, sounds great. Does Forex shut down during Thanksgiving? No, Tim, it does not. Forex will be like the market that remains open. You might have limited broker hours, and brokers will tell you that, but they'll still typically be open till like 2 p.m. But yeah, there might be limited hours in trading, but there's still a Forex market moving. Yep. So it's, I mean, again, it might, like I said, limited broker hours, maybe some higher spreads and liquidity. That's a little bit on the low side, but still, trade the trends, trade the breakouts. If we see them, we'll spot them next week. I'll look to follow those directions. Sounds good. All right, everybody. Thanks a lot for being with me on this Friday. Happy trading, lots of profits. See you Monday. Thanks. Bye.